You know the drill. It's late, you're scrolling through Zillow, and every single house that doesn't look like it's one strong breeze away from collapsing costs $500,000. The kitchen's got countertops from 2003, and the agent has the guts to call it a charming starter home. You're doing some quick math on your salary, and you just start wondering,
Yeah, if you've had that exact thought, let me just tell you, you're not crazy. It's not you, it's the math. And the math, well, it is absolutely brutal. So today, we are going to get into that math and figure out who on earth can actually afford a $500,000 house.
All right, let's just dive right in. The biggest problem here, the real trap, is the massive gap between what a bank says you can borrow and what you can actually afford without turning your life into one long, nonstop financial stress test.
and that's the key difference. See, we're not talking about just getting approved for a mortgage today. We're focused on what I call sustainable affordability. That's the number that actually lets you sleep at night. A bank's approval, that's designed to protect them. This whole explainer, this is about protecting you.
Okay, so to find that sustainable number, we have to play detective and uncover every single hidden cost. We're going to deconstruct the real monthly payment because believe me, it is so much more than just that mortgage number you see online. And it all starts with a fee a whole lot of people are forced to pay.
Let's talk about PMI. Honestly, the best way to think of it is as a kind of poverty tax. Since most of us can't just magically save up $100,000 for a 20% down payment, we get hit with this extra monthly penalty. And the craziest part, it's insurance that you pay for, but it only protects the bank if you default. Makes sense, right?
So let's build your true monthly cost piece by painful piece. It's kind of like building with financial Legos, except it's way less fun and a whole lot more terrifying. Let's start with the base.
So let's say you scrape together a 10% down payment, that's $50,000, and you get a loan for the other $450,000. At an interest rate of around 6.5%, your basic payment for principal and interest is going to be about $2,850. Now this is the number the online mortgage calculator spits out. It's the number everyone focuses on, but it is a very, very deceptive starting line.
Next up, you got to add in property taxes. Now, this varies wildly depending on where you live, but a pretty conservative national average adds another $500 to your monthly bill. Just let that sink in. $500 every single month that goes straight to the government and builds exactly zero equity in your home. The total is already climbing.
Then, of course, there's homeowners insurance, which has gone through the roof lately. I mean, with all the increasing risks from fires and floods, you're looking at another $300 a month, easy. And this isn't optional. It's required to protect what is now your biggest and most vulnerable asset. And now for the one cost everybody, and I mean everybody, forgets: maintenance. The rule of thumb is the 1% rule. You budget 1% of your home's value every year for repairs. So on a $500,000 house, that's $5,000 a year, or $417 every single month for when, not if, the water heater decides to give up. This little fund is what separates responsible homeowners from people in a constant state of pain.
And of course, we can't forget our old friend PMI. Since we only put 10% down in this scenario, we have to tack on another $300 a month just for the privilege of not being rich enough to avoid it. So, after all that, what is the grand, terrifying total? There it is, your real, actual, true monthly housing cost isn't that nice-looking $2,850. No, it's nearly $4,400. This is the number that really matters. This is the number that will dictate your entire financial life. And that leads us to the next logical and frankly brutal question. So to afford a payment of $4,367 every single month, what kind of salary do you actually need to be bringing home? Well, the answer is probably a lot more than you think. Let's look at two different standards. You've got financial advisors who recommend the 28% rule, which says your housing costs should be no more than 28% of your gross income. If you follow that safe advice, you need to be making $187,000 a year. Now, banks, they're a lot more lenient. They use a 43% debt-to-income ratio, but even by their much riskier standard, you still need to make $150,000 a year. And here, my friends, is the punchline. This chart shows what percentage of households in the U.S. actually earn that much. Only about 20%. That means, and there's no way to sugarcoat this, that 80% of the country cannot comfortably afford what is being sold as a starter home.
But what about the people who try to make it work anyway? Let's turn these numbers into a real human story. Let's meet the Johnsons, a hypothetical couple who stretch every last dollar to buy that dream home.
Okay, so the Johnsons have a combined income of $160,000 a year, which sounds pretty great, right? But after taxes, their take-home pay is about $9,500 a month. And as you can see here, their housing costs eat up almost half of that, leaving a dangerously thin margin for, everything else in life.
Let's break down where the rest of it goes. You've got car payments, student loans, groceries, utilities, all the stuff you just have to pay for. After all of that, they're left with just over $1,500. And that's not for fun money. That has to cover savings, any emergencies, clothes for the kids, maybe a birthday party, any hope of a social life. It's not a lot.
This is what being house poor actually feels like. It's lying awake at 2 in the morning wondering if you can afford new tires for the car. It's when the air conditioner breaking isn't just an inconvenience, it's a full-blown financial crisis that sends you spiraling into credit card debt. You end up a prisoner in your own beautiful home.
So, is the only choice to live in financial misery? Absolutely not. The real key here is to shift your entire perspective and choose a different path, one that's based on your reality, not just the dream that's being sold to you.
On one side, you have all this societal pressure, right? This constant drumbeat that you have to buy a house, that renting is throwing money away. But on the other side, you have the cold, hard math. Since 1990, home prices have shot up by 400%, while wages have barely climbed 180%. The game itself has changed.
And this is why we have to redefine what wealth really means. It's not about owning a single asset that has you trapped. Real wealth is freedom. It's having enough margin in your budget to actually build a life, not just service a giant mortgage.
And this might just be the most important thing to take away from all of this. And I'm telling you right now, you have permission to see this game for what it is. You are allowed to look at these numbers and decide that sacrificing your financial stability and your mental health just isn't worth it. Sometimes the smartest move you can make is recognizing when a game is rigged and choosing to play by your own rules instead.
So I'll just leave you with this one question to think about. As you're scrolling through those listings, just ask yourself, is the home you're chasing going to be a foundation for building a better life? Or is it a beautiful cage that's just going to end up trapping it? The honest answer, based on the math we just did, might change everything for you.